In this video, we will cover the ultimate real estate investing basics guide and everything you must know as a beginner. According to the U.S. Census Bureau, individual real estate investors accounted for owning 75% of all rental properties in the United States. And what's more is that in 2007, around 2/3 of investors were primarily focused on the stock market. And now that number has fallen to 50%, with many millennials choosing to invest in real estate instead. So, if you're interested in becoming a real estate investor, be sure to study this video as we go through the whole process to start investing in real estate. Before we begin, make sure to like this video and subscribe and turn on notifications to be notified whenever a new video comes out so you can receive all the latest financial tips that we have to offer. If you know someone who would benefit from this video, please share it with them. Without further ado, let's begin our video on the most important real estate guide you'll see if you're a beginner. Step 1. Building your credit score. The first step is to get your credit score as high as it can be. This is because your credit score is next to your name every time lenders decide to give a loan, and it influences how you are treated as a client. Unfair? Yes. But this is how it works. Your credit score corresponds directly to the interest rate the bank will give you. Because the higher the score you have, the lower your interest rate will offer, as you're seen as a more reliable customer. And as you know, the lower the interest rate means more money goes into your pocket rather than your lenders. So step 1, improve your credit score. Step 2, save your down payment. Next is to come up with a down payment. Set a savings goal to have enough money for a down payment and the additional fees that come with the deal. Such fees as title transfer and lawyer costs. Set a reasonable time frame to save up the down payment. Typically, it takes anywhere from 12 to 36 months to come up with a decent down payment. If you already have a home that is mostly paid for, you can visit your bank and take out a loan against the built-up equity you've created in your current home. Reutilizing this equity is a smart way to speed up this part of the process, shaving off months or years. Step 3. Proof of income. The banks and brokers who lend you money like to see a consistent record of employment, usually over 3 years, sometimes upwards of 5. Additionally, they will look for stable income over several months or years to guarantee you will pay back the loan without issue. Usually, you will need to show proof of income on the last 1 to 2 years of your tax returns and most recent 3 months of income statements. Lenders will also look at living expenses and conduct a stress test to ensure the loan or mortgage can be repaid even if the interest rate goes up. Well, we've covered a lot so far, so let's summarize the first 3 steps. First is to have a high credit score. The second is to save about 5 to 20% of the house price as a down payment. And the third is to have stable income rolling in. All right. Now we are set up to move on to the next steps of the process. Step 4. Get pre-qualified for a home loan mortgage. Getting pre-qualified for a home loan mortgage is probably one of the most critical steps while investing in real estate. This step means to talk with several lenders to understand how much buying power you have, what conditions will be applied to the mortgage, and the rate you'll receive. Most people think this is the only step when buying a rental property. However, there are many other steps. They believe this because this is the most important step, as we will discuss further in the video, but not the only step. Now, before you search for properties, talk to your approved lender first to get pre-qualified. This way, you'll save the hassle of going through the disappointment of finding a great opportunity only to learn that you can't afford it. People might make you believe that going to different banks or lenders and having them do credit checks will lower your credit score, but don't worry, because it has little impact on the grand scheme of things and won't impact the rate you'll get. It reminds us of a story that took place recently when a friend went to get pre-approved for a home loan mortgage. He got approved by 3 banks. Unfortunately, one of those banks increased its interest rate right at the end of the deal, making my friend decline their offer. Then he went with one of the 2 backup options he had. He then used the 2 remaining approvals to make the banks negotiate against each other, This allowed him to get an even lower interest rate than the first bank's initial offer. What seemed like a tough decision at first, he ultimately came out of that with a great deal for his mortgage. Competitively bidding on your home loan mortgage is the best strategy you can do in this whole process. The difference between interest rates in lenders can save you hundreds of thousands in interest throughout your mortgage. It's a very valuable exercise to visit at least 3 to 5 lenders to have them competitively bid for your business. Doing this gives you the upper hand in negotiating a great interest rate, as my friend did. You would be surprised what kind of deals you'll be given when you have another offer as leverage when visiting a home loan mortgage lender. The biggest mistake is when a person visits the bank they commonly use for their everyday banking and goes with that bank for their new mortgage because it's easy. This easy option costs them big time in the long run. Would you pay hundreds of thousands for convenient banking? I sure wouldn't. Step 5. Do your research. Before you invest your money in any piece of land or property, do your research. Search every area that you think has potential. If possible, drive through the neighborhood and look at all the services available in the area. Check out places where new restaurants are moving in, new workplaces are being built, and new apartments or subdivisions are being made. Other services such as schools, hospitals, and access to public transit also matter. All these things are indicators that the price for the area will shoot up soon. Also, look for a property that has the fundamental features but looks run down from the surface. These are prime opportunities for quick renovations or remodeling, like painting or changing fixtures to modernize the property to create instant equity. If you find a property with all these factors, you may have found a property for a real estate investment. It's best to check the future development plans for neighborhoods. These plans will tell you what to expect and potentially get a deal on the investment before it rises in price once everything is fully developed out. The trick is to see a fully developed area before it is actually developed. Don't make the mistake of seeing things for what they currently are, as the price increases from future development through time. This is how the people of stories you hear on how they got in before the big boom. They saw a fully developed future and bought ahead of time. And it all starts with research. Of course, this isn't financial advice, but financial education for you to learn from. I want to see you benefit from this, but please use it at your own risk. Our job is to educate you and equip you with the best financial information to grow your wealth. Number 6. Make an offer. So far, we've gone through much of the prep work. Now comes the exciting bit. If you see a property that has good potential, it's time to make an offer on it. When making an offer, always negotiate. Plan to negotiate a few rounds. This will yield a better deal overall after talking out the terms several times. It's best to make an offer in what is called a buyer's market. A buyer's market is when there are ample properties for purchase and not many buyers. So people selling will include incentives to secure the deal. When making an offer, always make sure it's done during a buyer's market to get the best deal when you can make your offer. Step 7. Conduct an inspection. You've done your due diligence during your research. Now it's time to do it again to ensure there aren't any hidden issues with the property you found. Carrying out inspections is necessary when you've finally gotten your bid accepted by the seller and helps provide the last bit of assurance before you lock in your deal. This is an excellent way to check out whether everything is good with the house or not. Make sure to carry out as many inspections as possible to ensure you have a complete idea of what condition your soon-to-be property is in. You can also pay some money up front to the seller for carrying out inspections and providing you with the reports. Consider it cheap insurance. What's even better is that you can bring in contractors who will evaluate your property and tell you how much it will cost to bring your house up to code. You can then voice your concerns with the seller just to have a clearer picture of what they're selling to you. And if you find something in need of repair, it can be used to reduce the price further on the deal. Or if it's really bad, it could cause the deal to fall through and not go ahead, preventing you from buying a liability rather than an asset in the first place. Step 8. close on your deal. If everything comes back in good condition from the inspection, it's time to close the deal. The duration of a deal usually takes to close could be anywhere between 7 and 45 days, depending on how involved the home loan mortgage is, the type of property, the lawyer's process, the transfer of title, all play a role in how fast the deal closes. Step 9. Renovations. Now that the property is yours, a quick way to quickly increase your property value is to do renovations. If you did your research correctly, as outlined earlier in this video, not only are you buying an undervalued property, but you have a place whose value will be rising when you invest in its repairs and remodeling. By doing slight remodeling of your property, you'll add substantial equity to your property very quickly. If you enjoyed this video, give it a like and be sure to subscribe and turn notifications on to be notified when a new video comes out so you can receive all the latest financial tips. And if you know someone who would benefit from this video, please share it with them. Now that we've presented you with the 9 most important steps of real estate investing for beginners, you are all set to step into the world of real estate investing. Make sure to execute all your decisions with a long-term view to create for yourself an asset by searching for a property, buying it, and renovating it. Doing these will grow your net worth and make you a real estate investor. That's it for today's video. Make sure to comment on what you learned or how you plan to use what you learned today. We'd love to hear from you, and I will see you in the next video.